Assalamualaikum and a very good day to all of you out there. Welcome to my channel. I am Yusnaliza. Today we are going to discuss our common test question. Question 2, November 2017. We are going to discuss questions for topic 2, the Malaysian Conceptual Framework for Financial Reporting, which is under the course code FAR210, Financial Accounting 3. FAR210. So let's start. Okay, question 2A. List 4 scopes covered in the Malaysian Accounting Standard Board. Malaysian Accounting Standards Board, MASB, Conceptual Framework for Accounting. So you're just asked to list, right? So you're not asked to list all the 8 scope, but just 4 of the 8 chapter. If you can still recall, in the conceptual framework, that scope is put under chapter. So there is chapter 1, chapter 2, chapter 3, chapter 4, 5, 6, 7 and 8. By now I am sure you remember the main point of each of the chapter. Chapter 1 is on objective of the general purpose financial statement. Chapter 2 is on the quality side of the financial information, or they call it qualitative characteristic. Chapter 3 is on what made a financial statement and who are the reporting entity. Chapter 4 is on the elements of financial statement. So these are the chapters that talks about asset liabilities, income, expenses, and equity. Chapter 5 is an important chapter because it guides on how to recognize and de-recognize items in a financial statement. Chapter 6 is a lengthy chapter which is on measurement. Chapter 7 is on how we present according to the conceptual framework requirement. And how do we disclose that in the financial statement? And at the end, how do we report? The last chapter is on these concepts of capital and capital maintenance. So if you were just to state any 4 out of that 8, you will be given 1 mark for each of the points. So for 4 points, 4 chapters, just list the chapter, and therefore you get that 4 marks. We move on to the next chapter. Question, part B. Financial information is deemed to be relevant. So these are the fundamental qualitative characteristic of relevant. If the information is capable, so this is the important idea of what we meant by relevant, capable of making difference in users' decision, their economic decision. You are just to state, you don't have to explain. You just need to list what are those values, or what are the ingredients of relevant, which must exist in order to make the financial statement capable of making that difference. Or in other words, capable of making difference here to the user's decision is what you call relevant. So you just to state, so you just need to remember that under FQC, you have relevant and you have faithful representation. And under relevant, these are the ingredient of relevance: predictive value, confirmatory value, and materiality. Okay, by listing this, that will not give you 2 marks. You just need to pick up any 2 of it. So that are 2 that you need to list, not all 3, just 2. Okay, that will give you 2 marks. Next question, part C. You are to discuss between the 2 concepts of capital as identified by the conceptual framework. So that is the last chapter of the conceptual framework, which talks about physical, if you can still recall, capital, maintenance. Yeah, that are the two concepts. Another one is financial capital maintenance. So these are the two concepts, and you are to distinguish. So when you have the word distinguish, you can also make your answer simpler by putting them into a table. So you can just put the heading here, put next to each other, and then start writing your point to differentiate between the two. Look at what are the focus. So maybe you can refer to your notes and you remember them now. So those are in the last few pages in the notes, or it is also in the textbook. Okay, those two concepts are financial capital maintenance and another one is physical capital maintenance. When we talk about capital maintenance in terms of financial, we are talking about the focus is on net assets or equity of the company. Net asset is simply total asset minus total liabilities, right? Or net asset can also be in the form of equity, which is share capital issued and paid up plus reserve. So normally, net asset is measured in terms of the issued and paid up share capital and the reserve. So capital is measured by looking at the amount invested by the shareholders. So you will normally measure it by way of looking at the share capital, because the amount invested by the capital provider, that is normally in the form of share capital. And profit is only earned if the financial or money of the net asset at the beginning of the year exceed the one at the end of the period. Let's say you have a statement of changes in equity, and let's say this is the one beginning of the year. Yeah, and this is share capital, and this is let's say retained profit as one reserve. Yeah, that a company normally have. So the balance at the end of the year of these two items, which is the net asset, share capital, and reserve, right? If that is more by the end of the year, let's say beginning of the year is, let's say we put a figure here, 10 million. At the end of the year, the share capital now rise to become 12 million, right? Same goes to the profit. Beginning of the year, maybe 2 million. At the end of the year, becomes 3 million. So there is an increase here, So if that is the case, we say that that is financial capital maintenance, because our focus is that profit is only earned when your net asset at the end of the year, which is somewhere at the end of the year, means referring to the share capital and reserve, are more than at the beginning of the period. That one is focusing on the net asset of the company, right? Net asset. Next one, physical capital maintenance. It is measured at the operating capability. Is more on the physical, physical output. So capital is regarded as the productive capacity. So if you are productive at the beginning of the year and you become more productive at the end of the year, then you can say that profit is only earned. So if the physical productive capacity at the end exceed the physical productive capacity at the beginning, so therefore you are said to have achieved the physical capital maintenance. For example, let's say having 10,000 units, you are able to produce you are able to produce, let's say, 15,000 product, right? With that capacity. Maybe in the future, with the same capacity, you are going to be able to produce more. So that is considered as physical productive capacity, meaning that the production at the end of the year, production or the output at the end of the year, is more than at the beginning of the year using the same production or same units of let's say material, right? So if you are able to do that, that is considered as productive capacity being achieved in terms of physical capital maintenance. So I'm explaining that to let you understand better. Next, question 2D, last question. 1st April, FAR210 trading sold goods to complex trading. So there are two parties. And if you look, these are the seller and these are the buyer. Worth 3,500 and delivered the goods on the same day. So they delivered the goods on the same day, meaning that economic resources has been transferred by the seller to the buyer or to the customer. Complex trading agreed to settle the payment on 30th of June. So what you saw here is because it is not settled the payment there and then, the payment is not settled there and then, it was to be settled somewhere in June. This is an example of a credit sales made by the seller to the buyer. Why credit sale? You transfer, you deliver the goods, right? But the payment were not yet received. So in terms of debit credit, that is where you debit account receivable, if you were to think about FAR210 trading record, with the name complex trading, and that one will be credited to the sales account or sales revenue. How much? With 3,500. So that is just to let you see the debit credit so that you are clear that there is an increase in asset and as well as there is an increase in income. So that's why the question asks you to define income. So if you were to define income, nothing to do so much with the statement there. You just need to define income, which is increase in asset, decrease in liability, so that you have remembered. But this is the part that relates to the statement. You have to discuss whether or not FAR210 trading, which is the reporting entity. Remember the chapter in the conceptual framework discuss about reporting entity, and our reporting entity here is the selling company. Can it recognize or not the goods sold to complex trading? Complex trading are what you regard as other entity, and this other entity, to be specific, this is your accounts receivable. Okay. Can you recognize that as an income on 1st of April 2017? Meaning that on the day you deliver the goods, can you recognize that as an income? Next. So just define income. So in a simple way to define income, you can just make some simple equation. Increase in asset, which can also be decrease in liabilities, which result in increase in equity, other than those relating to the contribution from the holder of equity claim. So if you can do this, you can also define actually expenses in case the question asks you to define expenses, which will be vice versa, decrease in asset, increase in liability, and there is a reduction in equity. So that is also one way of trying to remember the definition, right? So income is an increase in asset, decrease in liability, or increase in equity. So you can use this simple diagram, if you can put that as a diagram. Next. Okay. When can FAR210 trading, which is the reporting entity, recognize goods sold to complex, right? To complex trading as an income. Before you can recognize that as an income, recognize what? Goods sold on credit as an income, you need to first look at whether it meets the definition of income. You can recognize as an income here because just now you check, right? Definition of income, that is an the definition given, which is an increase in equity. So in our case, when is the increase in equity? When there is a net profit that is being earned from the credit sales made by Forte Trading to Complex Trading. And there is also an increase in asset. Remember, I told you earlier there was an account receivable arising from that credit sales transaction since the amount were unsettled, right? So those are actually showing the definition of income has been met. So therefore, if that is the case, income is recognized, if you can still recall what you learned in FAR110, when it is earned, right? So you recognize income when it is earned, meaning that when you deliver the goods to complex trading and complex trading has acknowledged the receipt of the good, at that time you can recognize your sale, not when cash is received. That's why you debit just now the account receivable and you credit the sales revenue. So therefore you can recognize the goods sold to complex trading as an income on 1st of April. Why? Because you have created the sales revenue. Remember earlier we did this? Debit account receivable, right? Complex trading, credit, sale revenue, right? Sale revenue is your income. Income as a result of ordinary course of business, right? Which is your principal business activity, right? And our figure earlier was, how much was it? 3,500. Okay, so 3,500. So therefore, the sales revenue is being created when the goods were delivered and it reached the customer. There was an acknowledgement by the customer. Therefore, when that happened, the value can be faithfully represented. Why? The income can be reliably measured at 3,500. Okay, therefore income can be recognized when it meets the definition, and when that meets the definition, it is when you recognize as it is being earned. Or maybe when you talk about the performance obligation is being satisfied. So the performance obligation is being satisfied when the goods are being delivered. Those goods that are ordered by complex trading are being delivered and the terms and conditions are being met. So therefore you can recognize the income. Okay, that's it. Thank you for watching. I hope this video benefit you. If it benefits you, keep on sharing the wealth. I will see you and I will see you. Thank you for watching. Assalamualaikum warahmatullahi wabarakatuh. I am Madam Yusnaliza signing off.